Welcome to Capital Link's company presentation series.
Welcome to Capital Link corporate presentation webinar series. In this series, senior management of listed shipping companies provide an update on their operations, business development, strategy, and sector outlook. I'm Nikolas, president of Capital Link. Capital Link is an investor relations firm also active in event and conference organization. We work with several private and publicly listed companies, including companies featured in this webinar series. As noted in our disclaimer, these presentations are purely for informational and educational purposes. They do not constitute investment advice or advice of any kind, and Capital Link bears no responsibility for them. Today, we have with us the senior management of TEN Limited. We have with us Dr. Nikolas P. Tsakos, the founder, president, and CEO of TEN. We have Mr. George Saroglou, the Chief Operating Officer. We have Mr. Kosmatos, Corporate Development Officer, and Mr. Apostolos Tsirakis, who is the Strategy and Corporate Development Officer as well. The whole session is 45 minutes. We will start with a brief slide presentation followed by a live Q&A session. Please submit your questions through the Q&A button at the bottom of your screen. Please include your company and name. Alternatively, you can email your questions to us at webinars@capitallink.com. Thank you for joining us. And now I will turn the floor over to Mr. Nikolas Tsakos. Mr. Tsakos, Dr. Tsakos, please go ahead.
Nick, thank you, and belated Happy New Year to everybody, and hopefully for a much safer and healthier year as we go forward. Hopefully very soon we will be able to be with you and visit all of you in the United States and around and in Europe to see our shareholders. Hopefully the days are becoming. And with that, I will ask our Chief Operating Officer to give us an introduction of the company's developments.
Good afternoon, ladies and gentlemen. Let us start with slide number 3 in our presentation. As you can see, this is the evolution of the company since our inception in 1993. We have gone from 4 vessels to a pro forma fleet of 71 vessels currently. We have built an operating model that is crisis resistant. And in this, since 1993, we have been through good and bad markets. And one of the characteristics of the company has been that we managed to grow the company regardless of where we were in the cycle. And we have faced, this slide shows that we have faced 4 major crises. The Far Eastern crisis of 96-97, the 9/11 crisis between 2001 and 2002, then the credit crisis of 2008-2009, and the COVID crisis. Every time the company faced a crisis, we came out of the crisis stronger, with a bigger fleet, with a better performance. And if you look, since inception, we have grown the company on average 15%. The next slide, slide number 4, shows you the fleet as it stands right now, and it's divided. Divided into the various sectors that we operate. You see that we have 52 crude carriers, from the biggest of the asset class, the VLCCs, all the way down to the Panamax. We have 2 VLCCs, 14 suezmaxes, 19 aframax tankers, 7 LR aframaxes that are capable of carrying both products and crude. And this is why they are denoted by the green color. And 10 Panamax tankers, again, being able to try to move both crude and products. Then we have 12 vessels currently fully dedicated in product trades at the moment, 6 handymax and 6 handysize tankers. And then we have a specialized fleet of DP2 shuttle tankers and LNG. We have 3 LNG vessels in the water. We took delivery of our last LNG last week. We put out a press release with the accretive charter of this vessel, the Tenergy called LNG vessels. And then we have 4 DP2 shuttle tankers, which operate in offshore oil fields. The fleet is very much versatile.
And very diversified, as George says. I think we have 29 vessels that are in the that can trade products, and then we have 35 vessels that are specifically crude traders, and of course the 7 vessels are LNG and are our DP2 vessels, and we have an employment model that enables us to be able to cover our expenses and leave the upside in our various contracts of profit sharing. And as you see, the vessels that we have with the dark blue in this presentation are on fixed time charters. The light blue, they have profit sharing arrangements, and the vessels in red are the ones that are taking advantage, or hopefully will take advantage of the spot market when it comes. So we are positioning, I would say, the fleet in a way to be able to have a very first-class clientele. We are doing much more industrial shipping, long-term contracts. We actually build whatever our clients are requiring us to build, all based on employment, which is accretive and has a profit-sharing arrangement. We have been, I would say, very proud to increase our relationships with many of the first-class charterers like Chevron, like Equinor, just recently, and of course with companies like Trafigura in recent months, where we have signed long-term employments with a minimum and a profit-sharing arrangement. This gives us the, we are able at least to maintain our cash flow positive by covering all our expenses, which means our operating expenses, our interest, our depreciation, and our G&A through our time charters. And if the market and when the market is positive, then all our profitability comes, I would say, from the profit splits or from the spot vessels. Just to look at it as we speak today, every $1,000 of increase in the vessels that we have on the spot on an annualized basis almost will add $0.50 to our bottom line. One of our first obligations, of course, is to significantly enhance our balance sheet. And what you will see here is that we have reduced close to $400 million our bank debt, and having also in addition we have repaid 2 of our preferreds. So the company, through our long-term employments, we are building, or at least we are continuously using the cash to reduce our obligations and this way enhance our bottom line. Well, these are some historical data going back to almost more than 15 years. And you see that we have always tried to be conservative, kept our debt in always around the 50 or even under the 50%, even in today's where the market conditions are not the way they have been. Well, these are our 9 months results. I would say that for 2021 has been one of the poorest markets in recent history for tankers. The last quarter has been we have seen a correction in that. However, the company has maintained strong balance sheet, reducing debt, and not actually growing the fleet significantly with the addition of our LNG, which just, as George said, joined our fleet last week. We believe that 10 is a very good buy. We believe that the company right now is valued in distress levels, although the company is on a growing mode. And we are one of the oldest companies been public in New York. We will be celebrating our 20 years very soon, sometime in February. We have a very, very long-term employment going forward. We have 1 billion of minimum secured revenues over the next 3.5 years. We are very diversified. We are growing the fleet. We're selling older tankers. We sold 10 tankers in the last 18 months, and we have expanded by the same amount of ships, with the majority of them being of the dual fuel green technology. The management and the major shareholders own around the 40% of the company. We have never sold the share. We're always buyers of our shares. We try to keep a very on-hands management, keep operating expenses as low, which every dollar counts in the difficult markets. Utilization is very, very important for us. So we believe that overall right now, 10 is a very attractive proposition for yield and value investors. And perhaps Harry would like to talk a little bit about how the market is overall, which I didn't touch on. I mean, we are looking at a market which is well balanced.
Absolutely. Thank you, Nikos. Yes, I think we are, as I keep saying, taxiing on the runway ready for takeoff. The market fundamentals are very favorable for the owners. We are currently at an almost 25-year historical lows when it comes to the new buildings. And historically, it was a new building, the oversupply of vessels that destabilized the market. So today we are looking at an under 8%, probably close to 7% order book that will come into the fleet over the next 3 years. When at the same period, almost double that number will depart the fleet either through obsolescence, through the vessels been scrapped. And actually, we have seen an uptick in scrapping. And with all these new environmental regulations coming into force, we do expect an acceleration in the scrapping level. So over the next few months, 2 or 3 quarters, we do expect these to begin to show in terms of charter rates available, both on the TC, on the time charter, the long-term market, and also in the spot. Today, we are still suffering industry-wide from the impact of COVID, the lost barrels that left the market because primarily of the lack of demand and the lack of flying. The demand is coming back. We are seeing increasing levels of demand. The EIA today expects record demand to be achieved by the end of the year, and we are gradually seeing airlines coming back into the fray, and that translates into more fuel oil, jet fuel. It's what it's currently missing. During the initial part of the COVID crisis, we lost approximately 10 million barrels, 12 million barrels of oil. We have gained almost half of that. So we are now in the process of getting the other half back, or probably less than that. We do expect eventually OPEC to start releasing more oil into the market. And obviously that will mean more barrels that will go into ships.
So Harry, as I said, the environment which we operate is getting better. I mean, if you see what we have, the 3 major shipping segments have been differently affected by what we're seeing. The tankers were positively affected for the first 6 months of 2020, when everybody was storing oil in view of the pandemic, and that's where we enjoyed a good run. The container market for the last year has actually outperformed most of the markets historically by the, I would say, ordering of goods around the world and the huge delays caused by the pandemic. So we are seeing a market that has actually gone from almost tenfold in many cases of returns. And we saw this in share prices. We saw share prices have gone tenfold in the majority of the container market. The dry cargo market has a steady growth over that period. I would say healthy rates and steady growth. And tankers are, waiting to happen. We do not expect tankers to. Well, you never say never, but we don't expect tankers to our share prices to tenfold. But I think to double from where they are, it's the last that we can do. I know we cannot make predictions, but this is just a feeling we have. Looking of what Mr. Kosmatos said, as soon as the world starts returning, well, let's hope that this Omicron is going to be one of the last strong viruses that we would be facing, and the world will be coming back to normalization. And we are seeing a good and strong indication of major oil companies taking ships for a long period of time, long charters going forward. So I believe that we are the next mover. Inflation, which is around us, is always very positive for shipping also. And we are at this stage, and with this, I would like to open the floor and answer any ideas or any questions.
Thank you, Dr. Tsakos. I would like to remind everyone that you can submit your questions through the Q&A button at the bottom of the screen, or you can email your questions to us at webinars@capitallink.com. So we already have a number of questions submitted. So I'm turning it over to the management team to reply to them.
Thank you. I think the question goes, you have recently entered the dual fuel space through your ordering of 4 aframax tankers. Do you see more investments from 10 on that front, or will you hold until these vessels will work out? Well, yeah, I think that's a very good technical question. And we would not have taken the step to order the dual fuel vessels without the long employment provided by this first-class charterer. So, but our intention is from now until 2030 to be able to have the majority of our fleet in much greener technology, and the only thing that exists today of that technology is the dual fuel. And I want to go back, George. Do you think you can take us back to a slide where we had George talked about the company's four crises so far? I think it must have been one of the first slides, because by giving a small example of what had happened there. That's fine. Thank you, George. So here you see that when the company started in 1993, it started with 4 older single tankers, and that was exactly the period of time that the OPA 90, the legislation of all vessels, had to be double by as close to the millennium was implemented. And that's when we changed the company around. We grew a significant fleet. We have almost built every ship that you see in our fleet list has been built by us, for us and for our clients. And I think we are going, and we have made by the millennium, we were able to have a full double fleet. I think we are looking to do the same. That was a change on the actual hull design of the ships that has made the industry much safer. And we are looking to accomplish the same, starting with a dual fuel technology by 2030.
Next question.
Today, you announced the delivery of the third LNG carrier with a 5-year employment to a major end user. You indicated the charter has the ability to capture the upside of the current strong market. Do you expect this firmness in rates to continue? And if so, shall we expect more LNG investments from TEN in the near future? If the firmness continues, will you order speculatively? Again, I think that's a strategic question. We are a diversified fleet. We have been one of the first companies that has entered our first new building in 2007, LNG carrier. However, we have not, being a diversified company, we have not over-expanded in this very interesting segment, mainly because of the technological changes. And I usually jokingly say that technology in LNGs changes quicker than my iPhone or our iPhone. So I still have the same iPhone I had 5 years ago, although 5 years ago the technology in the LNG segment has significantly changed. The short answer is that yes, we will be expanding further in that segment as we go forward, and you might see us expand with a couple of speculative orders if the market allows, when the market allows.
Next question.
The company has been known for its more conservative approach when it comes to chartering the vessels. The majority of the fleet was employed on time charters, while a small part of it operated in the spot market. Today, we see this pattern have been reversed, and quite a few vessels are in the spot or profit-sharing provisions. Is that because you expect the market to rebound strongly immediately? And if so, when or why is that? I think this is it's a question and an answer at the same time. Yes, we expect that the market will rebound, and we hope that it is, as I said, the last market that has not been positively affected from the normalization of where we are. And we would like very much to have the ability to have the vessels out there. However, we are there to charter ships at a lower minimum rate and have the upside profit share arrangement, as we have done in at least 5 vessels in the last month. Then I agree that TNP is selling at distressed pricing levels. So why did the company sell common stock in the market in the market that year? Well, again, that's a very, very good question, and it is obvious that when the time that you want to invest in cheap assets is the time that the market is poor, because if the market is very strong, the assets are very expensive. So that's when you have to try and balance your decision and decide to understandably sell some common stock at lower levels to raise the equity to make the investments that will carry the company in the next period. So we would love to raise stock at $25 and we were not far away. About 3 or 4 years ago, we were close to that levels. But when we see an opportunity, we might raise a small amount of equity to invest in new technologically advanced vessels. And then how comfortable you feel with your cash position in case the market recovers in 2023? ATM continues even at current levels. Thank you. Well, as I said, the ATM only takes care of specific transactions and not on a continuous basis at these levels. And our cash position, which I think we must have ended the year close to the around 140 million, is I have always been very conservative in keeping our cash, because I believe that that's when you need it, is when the opportunities arise. So we always want to maintain significant cash. I would say for any operating company, the cash, the normal cash is approximately anywhere between $500,000 to $1 million per vessel. We are a little bit more conservative than that, and we are usually doubling that up. These are the questions we have, Nick, and we would like to take this opportunity again to thank you for organizing this, keeping us at least open to our shareholders and to the market. Congratulations for what you're doing for the industry, and hopefully very soon we will be able to do this face to face. We believe, I strongly believe that the worst is behind us, and that we are going to be all facing a healthier, first of all, a healthier for everybody, but a financially healthier also 2022 for the industry. Thank you.
Thank you, Dr. Tsakos, and to the rest of the team. It's been a pleasure having you with us. Congratulations for the delivery of your first LNG. Yeah. Harry, you wanted to say something?
No, just I'm seeing another question that just came in. If we're buying more ships, I think Nikolas has more or less answered that. The answer is depends on our clients. If our clients have needs, we will not buy ships, we will build ships. We will build ships against long-term contracts, accretive contracts, as we have done on the LNG, the aframaxes, and some crude carriers of the recent past. So when an opportunity arises, and this is how we have achieved this diversity on the fleet, because effectively it answered the questions of our clients. They wanted a suezmax, we built a suezmax for them. They wanted a fleet of aframaxes, we built aframaxes. They wanted dual fuel, we built dual fuel vessels. In the future, they want VLs, we're going to build VLs for them. So yes, the answer is depending on the client needs, the company will grow. And
as long as the returns are accretive,
of course.
We are not a shipbuilding company. We are a ship owner company. As Harry says, we are looking to accommodate hand in hand with the major end users the progress of our company. So we are much more of an industrial model of shipping rather than the typical spot trading company.
Because
thank you very much.
You have been very well known also from your Intertanko years for trying to steer the industry against speculative ordering and exactly to order based on contracts with clients. I think you are well known for coining the phrase, gentlemen, keep your pens in your pockets. Don't sign new building contracts unless you have a specific need for them.
Exactly. And we have followed in our company, at least in our company, we are following that example. And I wish everybody again, and hopefully we can see much better days and better share prices very soon.
As a reminder, this presentation will be available for replay. So we will be making it available to everyone who would like to see it again. And thank you for being with us. It's been a great presentation and a great discussion. And congratulations again for the third LNG. That's a major.
Thank you.
Thank you.
Thank you, Nilo.
Thank you very much.
Thank you.
Thank you.
Thank you.